The Precious Metals Week in Review, March 11th, 2016. Brought to you by Precious Metals International. Volatility in oil and moves by the European Central Bank this week continued to trigger extensive volatility in U.S. stock markets. The number of Americans filing initial claims for state unemployment benefits plunged by 18,000 claims last week to a new seasonally adjusted level of 259,000, a 5-month low. The 4-week moving average of claims, which most economists consider a better measure of the state of the labor market, fell by 2,500 claims to 267,500, also a 5-month low. The Federal Reserve will likely not isolate this data for consideration of the state of the U.S. labor market when it meets next week to determine its next action in U.S. monetary policy. James Clapper, the director of U.S. National Intelligence, sent a letter to John McCain, the chair of the U.S. Senate Armed Services Committee, describing his projections for China's military capabilities in the South China Sea. In the letter, dated February 23rd, Mr. Clapper described the island construction in the Spratly Archipelago, saying, "Based on the pace and scope of construction at these outposts, China will be able to deploy a range of offensive and defensive military capabilities and support increased Navy and Coast Guard presence beginning in 2016. Once these facilities are completed by the end of 2016 or early 2017, China will have significant capacity to quickly project substantial offensive military power to the region." North Korean leader Kim Jong-un, in defiance of newly increased sanctions by the United Nations and in response to annual joint military exercises conducted by the U.S. and South Korea in the region, viewed another test launch of 2 short-range missiles and ordered the country to improve its nuclear attack capabilities. State-owned news agency KCNA said, "Dear Comrade Kim Jong-un said work must be strengthened to improve nuclear attack capability and issued combat tasks to continue nuclear explosion tests to assess the power of newly developed nuclear warheads and tests to improve nuclear attack capability." On Wednesday, state media quoted Kim Jong-un as saying that the North had miniaturized nuclear warheads to mount on ballistic missiles. The increasing belligerence of North Korea is becoming serious cause for concern to all countries in the Asian region of the world. The European Central Bank, ECB, took analysts and economists alike by surprise this week, announcing a larger-than-expected boost to its bond purchasing program known as quantitative easing, and a surprise decision to take rates even further into negative territory. The euro, contrary to what analysts believed would happen, shot higher against the US dollar when the news broke. Speaking at the press conference following the conclusion of the ECB monetary policy meeting, Mr. Draghi said, "Rates will stay low, very low for a long period of time, and well past the horizon of our bond purchases. From today's perspective and taking into account the support of our measures to growth and inflation, we don't anticipate that it will be necessary to reduce rates further." Of course, new facts can change the situation and the outlook. The news from the ECB came just one day after the Reserve Bank of New Zealand, RBNZ, surprised analysts by announcing an increase to its own easing measures, cutting the cash rate to 2.25% and leaving the door open for even more easing. The RBNZ governor said monetary policy will continue to be accommodative. Further policy easing may be required to ensure that future average inflation settles near the middle of the target range. On the heels of the announcement of further easing by global central banks, commodities trader Dennis Gartman discussed on CNBC the impact of global monetary easing on the price of gold. Mr. Gartman said, "The trend is up. The trend has been up for the last several months, and I continue to think that as long as the monetary authorities are going to remain as expansionary as they are, the trend will stay up. Monetary expansion equals higher gold prices." Further discussing the recent moves by the European Central Bank, Mr. Gartman said, "What Draghi said today turned the market. He has made it abundantly clear that he's going to throw more reserves into the system. The Bank of Japan is going to throw more reserves into the system, and the Fed will have no choice to at least hold monetary policy steady, if not become more expansionary following what the leads are from the ECB. Oil prices continue to improve this week heading into the upper $30 a barrel range after the International Energy Agency IEA said that U.S. and non-OPEC crude output was beginning to fall quickly and increases in Iranian supply had been less than dramatic. The IEA projects that non-OPEC output will fall by 750,000 barrels a day this year, which could stabilize oil prices as the decrease in production allows the world to begin working through the current supply glut. The euro traded essentially sideways against the US dollar ahead of the ECB's monetary policy meeting this week. At the conclusion of the meeting on Thursday, the euro took a brief but sharp dip to the downside before climbing higher against the US dollar in a near vertical spike. Friday saw a mild drift to the downside that was also brief, and then the euro climbed back near its highs for the week. The euro will close the week higher against the US dollar. The Japanese yen drifted steadily higher against the US dollar for much of the week, but had peaked by Wednesday and began moving lower. Following the ECB's announcement of more easing, the yen took a sharp but brief plunge to the downside from which it quickly recovered. Late on Thursday, the yen began dropping again, but appears set to still close the week flat to slightly up against the US dollar. All eyes will be on the U.S. Federal Reserve as it prepares to hold its next monetary policy meeting next week. Most economists and analysts feel that the Fed will be unable to follow through on its desire to conduct 4 interest rate hikes in 2016, despite what appears to be steady improvements in the U.S. labor market. The global economy continues to struggle, and the fact that other central banks are moving in the opposite direction, taking rates into negative territory, will likely force the Fed to hold rates steady when it meets next week. Raising interest rates in the U.S. as the rest of the world's central banks speed up their printing presses and take rates further into negative territory would likely have a serious negative impact on the U.S. economy, which seems to be the only economy currently considered to be showing any signs of serious recovery. The European Central Bank, the Bank of Japan, and the Reserve Bank of New Zealand are just a few examples of central banks that have pushed their rates negative, resulting in increasing pressure against the Federal Reserve. The Fed is likely to hold off on further interest rate hikes at a minimum and, in a worst-case scenario, may possibly resort to additional monetary stimulus instead. As global central banks compete to devalue their currencies and volatility in global stock markets increases, precious metals appear to once again be gaining status as a safe haven for investors in times of uncertainty. Gold has had its best start to a year since 1974, and the popularity of ETFs which track gold have skyrocketed as a result. Wise investors continue to choose to purchase physical precious metals as opposed to the paper representation of metals that gold ETFs represent in order to diversify their investment portfolios and avoid overexposure to stocks. Next week will be a heavy week for news on the economic front as both the Bank of Japan BOJ and the U.S. Federal Reserve meet to make monetary policy decisions. The BOJ took interest rates negative at its last meeting, and the problems facing Japan's economy have continued to escalate since then. If the BOJ announces further rate cuts or additional stimulus, the pressure on the Fed to hold off on any additional rate increases will grow even larger. Crucial political primaries are also taking place in the U.S. next week, which could winnow the field of presidential candidates even further. The turmoil surrounding the field of Republican candidates is adding further uncertainty to the economic future of the U.S., as what promises to be one of the most contentious presidential elections in U.S. history grows closer. If global macroeconomic uncertainty continues to rule the day and stock markets react negatively as a result, precious metals could see a serious surge in demand that the mining and refining industry appears no longer equipped to meet. As mining companies have watched their profits disappear while commodity prices have remained suppressed, they have shut down unprofitable mines and let workforces go in an effort simply to stay afloat and continue to service their debts. These same mining companies will not be able to begin immediate mine production at any facilities they have shuttered as prices have remained at current levels. The resulting lag in supply as demand escalates could create a massive shortage that could send prices rapidly skyrocketing higher. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, March 11th, 2016. Brought to you by Precious Metals International.